This is Greg for Teslafaninsight. Today's focus is on what's going on with Tesla's stock price, down heavily and possibly more, related to David Einhorn's mention of accounting problems for Tesla. Welcome to our trade blast for Friday. Typically on a Friday, only a small group of our Patreon supporters get this show, but after listening to a number of conversations with friends who are in the trading space, I decided to sort of open up our sort of trade blast today to sort of help folks understand what's going on and things to think about. So I'm going to start with an analogy today. There's a place in the United States called Bloomfield Hills, Michigan. So it's a place where the homes are beautiful. Many of the executives from the auto companies live there, and it's an amazing place to live. The issue, though, is that if something happens, for example, I was in a comparable place, Western Virginia, and I was sitting in front of the bank, and all of a sudden 5 police cars show up. So same thing in Bloomfield Hills is that if something happens at the grocery store, because the police don't have a lot to do, 5 cars will show up and address that call because those guys are kind of looking for action in an environment where there's very little. So let's contrast this in Detroit with getting off at the wrong exit downtown and all of a sudden running into gangs that are pretty much controlling an area. So you got off the freeway a few exits early and you're in a very bad neighborhood. So I bring this up today because in the case of David Einhorn, the problem that popped up is that if Tesla was allowed to continue the process the earnings were yielding, we're looking at a $1,000 stock price. And that's a combination. Number one, the numbers were good. Number two, after those good numbers roll out first into individuals and then institutions, it was going to push the stock price up. Then what was going to happen is a short squeeze would ensue. And so we end up with this brutal problem where, in essence, Einhorn's fund may have had to be closed. So those guys can play nice when they're not in jeopardy of losing their business. But a lot of you who responded to my show last night were talking about being investigated by the SEC, et cetera, and they should have certain penalties. Absolutely, that's the case, but they have really good lawyers. So that discussion is going to take 3 to 5 years to occur. So on one hand, lose my business because these guys are doing so well, or on the other hand, I go ahead and use the techniques at my disposal to actually shift what's going on with the stock. So hence, this is why prices are down, and a lot of folks are kind of sad today, including myself, frankly. What I wanted to bring up is I spent about an hour this morning having a conversation with sort of our largest trade buddy in terms of what happened for Tesla yesterday and why and what should one have been doing. Now, what happened with me and trading yesterday is that I got up at 4 in the morning, or 2 in the morning really, but at 4 the markets open, and I started watching Tesla stock price move down from 871 all the way down to about 855 or so, and then 852 when I started getting rid of my calls yesterday. I had some calls expiring today, May 1, and basically I made sure that I had to make some really quick decisions. First, stock was at 852. I still own call options heading into next week in the 845, 850 range. And so the question I had at that point was, okay, I have no puts to protect myself. So I have basically 3 choices. Number one, get rid of everything I have and take the money that's available, even though it wasn't as high as I could have gotten, even though I thought the stock price of Tesla would rise yesterday and not fall. Number two is sell everything and buy way out call options into June or July for there to be a completely different territory for me to own the options and stock in. Or a third option was to buy puts. So what I actually did yesterday was I sold basically half of my position. I bought, in this case, a couple of puts, but the put coverage I used was just great enough to address if a catastrophe happens. And so, as we saw with the stock price falling $100, based on what's happening today, the latter occurred. So I kind of bring this up because it's really easy to make money when everything is rising, et cetera. But if you're in an environment where you can go from Bloomfield Hills, or call it Beverly Hills, or Reston, Virginia, whatever the nice neighborhood is, and then you can quickly go into the hood or a very, very bad neighborhood in an instant. I'm just pointing out that you can make a transition from a very good neighborhood to a very bad neighborhood in the blink of an eye. And when these guys have their firms completely in jeopardy on the table, the issue that pops up is that the degree to which they're willing to go is way different than what they might have done when the stakes weren't so high. So I kind of bring this up because also another thing that we talked about that I thought was interesting is the whole idea of go for the base hit versus the home run. There are a lot of people that have been hitting home runs on Tesla as the stock price has been rising. And so one of the challenges that pops up is that if your bankroll is very small, $5,000 or $10,000, you're really in the business of base hits. Because if you can get Tesla, like for example, yesterday, a base hit would have been selling everything you had at 850, 860, right? Why? Because you had a nice base hit. It wasn't a home run you were hoping for overnight, but it was a base hit. Now, by staying in, you're really thinking, hey, I could go for the home run here. And yes, that is the thinking, but the challenge with home runs is that home run hitters are well regarded and loved, but their batting averages are usually in the 300 range, or 1/3 of the time they strike out or get an out. And taking that big cut can put you in some very large dollars, or it can put you in some very small dollars after you lose a lot of money. So I really think that there's a concept I have that I call trade your personality. So your personality might be buy some stock, ride the stock up and down until it gets to a nice level, as this company does well, and that's great, very, very safe trading. Another process might be buy calls and puts, or particularly calls that are way out, 3 months, 6 months, a year. You get more return than you would on a stock, but you're a lot more protected in that fashion. So I bring this up because one of the challenges right now is that a lot of people, including myself, saw there to be a potential for huge gains. And if Einhorn hadn't pulled this move, we'd have been sitting in some very nice positions. And the fact of the matter is that I actually think the opportunity is still there, because the accounting skills and analysis that David might do are comparable to what any analyst on Wall Street is able to do. So the reports that they build in order to hand over to the institutions today and Monday, and therefore the institutions can buy and sell from there, are excellent. So I really think this is going to be a non-issue, but it did the goal, which was to temporarily sort of stop the damage and give the hedgies an opportunity to sell out of their positions without getting creamed in the process of a short squeeze. So in essence, what I'm saying to you is that it's really great. Well, part of the experience deal is knowing what not to do. And so part of sort of this discussion is just the fact that, one can leverage experience to know that if you're going to stay in a stock as volatile as Tesla that moves between 50 and 100 points a day, you got to have puts at critical time moments. And the more you have, you go from protecting your portfolio to actually making money on the downside of what might occur. In my case, I'm rooting for Tesla to be up. My positions focus on Tesla doing well. But at the same time, I recognize that you can go from a very good neighborhood where the police have nothing to do and the homes are beautiful into the hood and crime everywhere on a moment by moment basis in a blink of an eye. And that's why you want to make sure you're hedged as you enter these environments. And so it's unfortunate we've had this drop. I've been watching the stock since 4 o'clock this morning, and it's been down as low as 736. I saw 752 before I came on air. Chose to do a trade blast that's wide open because we want you guys to make money and not get blown out. And I'm concerned because I I kind of wanted to do this because I had just a very embarrassing moment yesterday. The embarrassing moment is I'm sitting there and I sell off my 810 calls that expire today, and I had some money, and I had to decide what I was going to do with that money. And what I was thinking about is I actually spent $1,700 to buy a put, and the reason I spent it is because I had, about $8,000 to $10,000 I wanted to protect, and I figured that one put would be about right just to protect it, not to make money on it. That put is now worth $10,000, $11,000 based on where the stock price is now. It may be lower as we open in an hour. But the general point I'm trying to make is that I couldn't hold my call positions unless I had a put. And it is very painful to give up that cash because you're giving up return when you buy the insurance or the put. But it can be rather prudent to protect gains that you have. And if you choose not to use a put, for example, you can use time by going out multiple months, or you can just sell out completely. But the simplest method is to slam a put in there. But I can't say that doing the right thing is not painful because you're giving up cash in the process. And so I'm disappointed for those who've lost money here. I'm actually rooting for that money to come back because I really think that I just spent some time. If you look up, I'll put a link in, but there's actually a company that's been tracking Tesla's accounts receivable for the last 5 years and looking at the ratios, et cetera, and everything is clean and well done. And so Einhorn's process is that as soon as you introduce a doubt and the market starts moving down, the bots will actually sell stock. And when they sell, they don't think about what the deal is, they just note the volume of selling. Once the bots sell, you start hitting things like stop losses. And so you can have further selling before anybody knows what's going on. So this is why puts on dangerous companies like Tesla is a very wise move, i.e. hedge your position. And if you're choosing not to hedge, then you're planning on potentially losing money in the short term, even though I think the stock does well in the longer term. So, this wasn't a joyous day of articulation, but we want you guys to do well. And both Patreon supporters, subscribers, and even viewers, we want you guys to do well. The key to it, though, is that the hood and then the Beverly Hills can be right next to each other when you're in this space. So it's better, as so many of my friends have said, it's better to have my weaponry and not need it than need it and not have it. And so from what I've seen or reading, there's a lot of folks who needed some protection and did not have any. And as a result, they got sort of jammed by Mr. Einhorn's comments and how it hits them with expiration happening today. But the challenge of becoming an experienced investor trader is just the fact that you see bloodbaths like this, and it makes it a lot easier to buy puts or hedge your position when you see these bloodbaths versus stepping in there and getting blown away. So, so that's sort of my take on things. I'm really looking forward to your comments on this. I really think that Tesla is in a good position, and I would not be surprised to see the stock price bubble back towards or over 800 as we get into Monday. But, the Einhorn stuff, I don't think Tesla has the staff or the experience on the staff in the form of the CFO to respond like they should today. And so I think the response to this is going to come from analysts who do the research and then write reports and hand them to folks on Monday and then we'll see sort of results Monday, Tuesday of what those reports had to say. But I'd say that this is also one of the only drawbacks to Tesla's management structure. As is the case with SpaceX, he has a thing going where he really likes to bring in senior managers who are very old and experienced initially, and then he wants to get rid of them and replace them with relatively young, inexperienced folks. And the challenge is that those folks are brilliant technically and can handle the workload, but when you hit pockets that represent once every 10 or 15 years for a lot of companies, you end up with a person who is in a position where they really don't know what to do when the environment gets very crazy in ways that it often does not. And I believe that the lack of response by the CFO to Einhorn's comments immediately, or having his accounting firm respond immediately using the news outlets to do so, is a clear example of the fact that you kind of really don't have heavy experienced advisors do it. But it's unfortunate to see how this is being handled, and that as investors, we're going to rely on outside analysts to answer this whole accounting question Monday or Tuesday, and then we'll know the deal. It's my take that, as I shared, that I think the stock price eases back up into the late 700s, early 800s here as the Einhorn issues are cleared. But it'd be a lot nicer to have it cleared by the company quickly so we can get back to nice roll of the stock, et cetera, rather than do this routine that we're doing now of sort of a slow death where we don't know if those guys are cheating on accounting in some way, and therefore it sort of keeps the stock mired in its current position of sort of an unknown as to whether or not the criticisms are valid. So, sort of that's our show for today. I really appreciate your taking time out. Your time's valuable, and we appreciate your doing so. Want to thank our Patreon supporters. If you like the show, please take time to like and subscribe. We also wanted to note that we appreciate constructive comments, and we strive to provide useful information in terms of better management of your resources, i.e. your stock or options or however you're investing. And we really want Tesla to succeed, but it is definitely prudent to engage in behavior that is base hit oriented if you don't want to take the big hits that come, the big losses that might come with attempts at the home run that don't work out. At any rate, once again, I want to thank you all for joining us. This is Greg for Teslafaninsight. Don't forget, 25 leg lifts a day strengthens your quad muscles. Also, no more than once a week fried foods. I want to encourage you to try to go to bed, wake up at the same time. I'm not doing that now because we're in the heart of earnings season for Tesla. So I got up this morning at 2:30 and then did some reading until we got up to market open at 4, because we want to make sure we give you guys best info possible. There's someone who just posed a question about, would you buy a put even though it has dropped? Excellent question. The issue right now is that, there's a famous line that says the trend is your friend. The market's down. It was down 400 points last time I checked. S&P down, and so was the NASDAQ where Tesla sits, and then Tesla was down. So there's some sympathy going on there. I have to make a decision what I do with my positions today. I have to sell out because everything expires today, even though it's worth a lot. So when I'm going to sell my puts, the question that pops up is, will I buy puts today? And the answer is, if you're, in my case, my calls are up in the 800, 850 zone. If my puts are worth more as an entity than my calls are, there's some call to say, hey, maybe you should just go naked today and wait for it to pull back up a little bit before you put more puts in. The answer is that I've got calls headed out over the next few weeks. And so my inclination right now is to sell out and control the puts I have, take those resources and figure out a structure that includes puts that allows me to get back in and take advantage of the good earnings Tesla had and the fact that they're doing well in China and there's a lot of great things happening for the company right now. And therefore, I disagree with Mr. Einhorn. So the only reason I'd be purchasing puts now is that as I restructure myself, I'm going to be restructuring with my call position, certainly adding to what I had before, but I'm also going to have some hedge in there. That way I can ensure that if craziness happens in a short term, I don't have to think about it. I know that the funds are coming back to my account. In fact, I have some puts that are left over from 2 days ago that are sub 720 that are just waiting for the stock to fall more. So answer is yes, I'm buying puts. Answer is why, because I actually want to hedge a position I'll be opening up. Yeah, there was just a comment regarding expensive premiums, etc. You know, one of the ways to deal with expensive premiums, depending on the size of your portfolio, is to actually do call spreads or put spreads. You limit the potential gain on either side, but you actually are able to get in at lower prices. So the argument against what I just described, i.e. very expensive, which I had to cringe when I bought an 850 put that expires today because $1,700 is a lot of money to spend on something. So let's say you bought a, whatever is $1,700, they say a computer that's $1,700, and you spent that money and you're thinking, I just spent $1,700 and tomorrow it could be a donut, right? And so zero. And so after I spent the money, I was like, that was so dumb. In fact, I was embarrassed that I did it. And I talk with a lot of Patreon supporters, but I was embarrassed I did it. But now that it's worth $12,000, the pain goes away a little bit because it's really an insurance policy against the rest of your portfolio. So if you do want to do some hedging, take a look at the put spread. You want to have at least 30 points, between maybe even 50 points on that protective, so you'd make money on the downside. But I think it can be a very wise move to have a hedge. And I'm mentioning hedges also because if you have a large position in stock, having a put position that allows you to sort of make money on the downdraft after you've taken a nice gain is actually quite smart thing to do. So I agree with you. It sounds dumb to hedge yourself, but like I said, when it works, your perspective is different. I do some skiing, and when I was learning how to ski, I had an instructor who had us wearing helmets, and he said, the thing about helmets when you're skiing is that they're completely worthless until you need them, and then they're priceless. So just like that, insurance is kind of in that realm of completely worthless until you really need it, and then it's priceless. And so that's kind of what I'm arguing here. At any rate, I want to thank all of you for joining us. We did not do our regular trade blast this morning. That is restricted to our Patreon supporters because I wanted all of you to sort of be mindful of the fact that you can go from Beverly Hills to the hood in one exit. And an exit in this case is Mr. Einhorn's comments. I do think that by Monday this will clear up. And, I just think that it's unfortunate that he did that, but he's desperate. He's potentially in a position where he loses his company. So I can understand why the guerrilla tactics are happening. And I again repeat that I'm very disappointed with my friends at Tesla because with a lot of hedge funds in jeopardy of going out of business, the tactics that they use against the company are expanded in their viciousness. And to not be prepared for them with all manner of professionals on hand on a SWAT team basis on call around earnings, I think is very, very poor management. And I hope Ms. Denholm does take a time to view this and develop a war room because the 1 week before earnings and the 1 week after, that war room needs to have contingencies ready to go. So at any rate, I want to again thank all of you for joining us. This is Greg for Teslafaninsight, Tschüss German, au revoir French, Lehitrot, Hebrew, Choda Hafez Farsi, Hey Do, Swedish, Zdravstvuyte Russian, Ni hao ma, Chinese, hello, do widzenia. Wanted to, again, we know your time's valuable and appreciate it, and I hope you found our info useful. Have a great day. Bye for now. Look forward to our next conversation.